Hey friends, welcome back to my channel. Ifeanyi Chukwu Isaac here. Great to have you check into my page once again. With your audience, I'd like to discuss the subject support or resistance. What do we mean by support or resistance? Support or resistance is the movement of the market or direction of the market in a bullish mode or bearish mode along a horizontal channel. These channels sometimes lean to the left as a bearish trend and other times lean to the right as a bullish trend. At support or resistance, the trend is not expected to range beyond or extend beyond the horizontal channels. Once again, support or resistance is a situation where the market is in a ranging mode, making a zigzag pattern along a channel which must not extend the support or resistance. The support or resistance is likened like a room situation where we have the ceiling and the floor. The floor represents the support while the ceiling represents the resistance. The trend must not extend beyond the ceiling, neither must it extend beyond the floor at any given time. It is important as a trader you recognize when the market is making support or resistance so you don't mistake this market condition as a trend. It is not to say that support or resistance are not market trends. Both are market trend, bullishly or bearishly, which must contain within the range, within the channels. At any given time, the movement must not extend the support or the resistance. Unlike regular trend, a regular trend has no limited range, has no limited direction. It could pull back, it could reverse, it could do so many things along, it could range along, it could do everything the market is expected or not expected. But when it's at support or resistance, the movement must be contained within the channel at every given time unless otherwise. Support or resistance is to be likened to a demand and supply situation where the market come at equilibrium. We have equal buyers and equal sellers at general accepted price. At support and resistance, we have a bullish and bearish aggression where none is allowed to overwhelm the other. As support, we have oversold. As resistance, we have overbought. At overbought, we see the bears rejecting higher prices, and so they want the price to come down. They push the price downward. While at support, we have oversold. The bulls doesn't want lower prices. They want the price to appreciate. They want to push the price upwards. They don't want lower prices. And in between this range is where we have the equilibrium, where we have equal strength of buyers and sellers at generally accepted price. It's important not to mistake support or resistance for a trend. Before taking a position, take note of support or resistance. Many at the times, most trader has placed position while at support or at resistance the market make reversed and hit their account negatively. It is important to know when the market is on support or at resistance. As support, the market makes a bullish reversal, showing rejections of lower prices. As such, the bulls aggressively push the price upwards to resistance position. While at resistance, there is a bearish reversal where the bears reject higher prices and show some rejections by pushing the price downwards to support situation. The continuous rejection of prices by the bulls or the bears does create support or resistance situation in the market until otherwise either the bull or the bear overwhelm the other and makes a breakout as upwardly or downwardly. Please take note, this doesn't happen in the Nigerian market situation. It is an egalitarian market situation where we have a general knowledge of the market. We have equal buyers and equal sellers. It is not attainable in Nigerian markets. Not at all, not at all. But it's unfortunate. It's unfortunate. It exists, but it's not anywhere foreseeable in Nigerian markets. Now follow me. Let me show you a typical support and resistance in practice. At the same time, where possibly you can place your buy and sell when at support sending a positive message to you as regard to support and resistance. Don't forget to use the comment box. Comment, like and share if it has one way or the other impacted your trading style or reminded you one or two things as regard to support or resistance. Don't forget to subscribe to my YouTube channel so that when I upload a new video, subsequently you will be among the first to see it. I have other videos in this like on my YouTube channel. Feel free to access them as it will also enhance your trading knowledge and your profitability in the forex market. Here is a typical chart showing support and resistance. In between, in the middle of my trend line, you can sight the candlestick running in between in range in between these horizontal trend lines. Let me make my trend line more visible. All right, welcome back to my page once again. At your glance is the typical support or resistance. The trend line, the horizontal trend line, the up represent the resistance, while the down, the horizontal line down or below represent the support. You can see the candlestick running and ranging in between these lines. The candlesticks must not extend beyond any of these parallel line, which is this parallel line is the line called range. The channel, it is called channel rather. The candlesticks must not extend this parallel line at resistance or support. You either call it the floor at support or you call it resistance at the ceiling. You can observe that anytime the candle extends beyond the parallel line, for instance this candle here, for instance here at this point the candle exceeded the parallel line and immediately it was pushed back downward by the bulls. You can see with the red candle, that is a rejection. You see when e got to when the candle here, the green candle get to the top, it was returned back, it was rejected, and the bears take over the market and push the market downwards. That is preferring lower prices to higher prices. At this point as well, the market to this junction trended bullishly and get to this point, and the bears push the market downward, rejected higher prices and push the market downward here. After some point, at this point, at the support, the bulls took over the market and rejected lower prices and start pushing the market upward once again. That is how it continues. This thus continues. Look at here, when the bears get to this point, when the bulls took the market to this point, the bears also rejected higher prices and start making lows, taking the market downwards. After this point, after the bears got to this point, the bulls also took the market up at that point and went up to this point, and the bears took it down again. So the turn continues down, ranging. The market must remain, or the prices must remain within both horizontal line. This horizontal line, the market must remain here. This is the resistance. This is resistance. Why this is support? The market must, the range or the trend must remain in between the trend, in between the range. You can see my candlestick ranging in between this horizontal channel. It must not extend this channel. At any point it extends beyond the channel. In these cases, the bears doesn't want higher prices. They must push the market back downwards at this point. So this turn, that being explained, you can see all this week at the end of the candle shows rejection. The week we are looking at the end of the candle or close of the candle shows rejection, and at the point where it's rejected as support, the bears take the prices and push the prices downward. And also observe that at this point, when the bears take the price to this height, to this point, there was a price rejection of lower prices, and the bulls push the price upward and get to this point, and the bears take it downward once again. There was rejection here, and the bulls push the price up once again. Area of, let me show you where to place a position, a buy or sell position at support or resistance. At resistance, at this point where there is a rejection, this point, where you find out that the BS has rejected higher prices, is those are the points where we place our position. We place a sell at resistance and we place a buy, a long position at support. Look at this point where I mark, I identified are the places, possible places, area of value where sales position could be placed. And that rejection after the first candle, after the first candle, this very first candle, red candle, the bearish candle, then we'll place our trade, we'll place our sell, we'll place our sell here, and then it trend to this point, which is our target profit. While at resistance and support, our possible areas of value or possible areas of buy are here, 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 and at this point where there is a rejection. At this point we place our buy here, buy position, and then the market, the push the market upward to the resistance. That is the resistance. Then the BS take it down before the BS come in and push the price backward down. At this point as well, number 2, we place our buy here, and then it trends, the market is push up to that extent to our resistance. That is where we place our buy. The same thing goes with this point. At this point we place our buy at the support and the market is pushed up by the bulls. The same thing here, the same thing goes to this very point. That is how to identify support or resistance. Whenever you see market, a flat market in this manner, know that the market is at a support or resistance position. You only place a buy at each time or a sell each time. The market reach resistance, you places a sell. When the market gets to support, we place a buy. It's either we are buying at one point or selling at another point. The BS reject higher prices as support. When the market hits, your candle hits resistance, get ready to make a sell with the BS. And as support, when the market hits support, get ready to buy with the bulls to push the market to higher prices. At this point is where we have, these are the points where we have, this is where we have oversold, and this is where we have overbought. We have oversold here, oversold. That's the BS has taken the price beyond unacceptable levels to the bulls, and at overbought, the BS felt the prices had become unfair. They want a price to come down, so they began pushing the price downwards. This is overbought, while this is oversold. To further buttress my narration earlier at the introduction, this horizontal channel, in between the horizontal channel are where the BS and the bulls shows aggression. The bears and the bulls show aggression in between the support and resistance, where the bear reject higher prices and the bulls reject lower prices. All these candle wicks, the wicks of the candle at the top and at the bottom shows price rejections. At the resistance here, top here, you see the bears rejecting higher prices, and at the bottom you see the bulls rejecting lower prices and push return the market within the channel and get to resistance, or the bears bring it back down to support. At any point, either the bulls or the bear are able to push the market or extend the range beyond the support or resistance, such as we witness here. Had it been the bulls continuously pushing the trend or the range upwardly, as against the bears, in such situation we term it a breakout. But unfortunately, the bulls were not able, but the bears here intercepted them and pushed the market back downward within the range. In this kind of situation, we witness the bears push back the range within the channel from resistance back to the channel. We will call it a break in, back it reverse. We will call it a reversal. The market reverse back and come back to the channel or to range. And if my story in some way positively impacting your trading style and knowledge as regards to support and resistance, don't forget to hit the like and share button, as it helps to sustain this channel. It will go a long way, and I appreciate and see your comments and your responses, and it's been incorporated in this production.